Welcome to the Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show, we do a deep dive into different industries using weekly charts to see what is happening on a longer time frame. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as StockCharts.com. Okay, so a bit of a rally was underway, and that seems to have hit a break. Today we're going to cover off oil and what a ride it's been. Got lots of charts to go through for that. So we want to talk about the stocks fell after the market options expiration, which was on Friday. Yesterday, basically a failed breakout, and today rolled down hard. So we still have the potential for a lot lower to go on the main indexes. I want to talk specifically to oil today, and I think there's a substantial opportunity for you there. Perhaps you'll be interested to just hear what's going on there. So anyway, on my website is also an articles tab, and if you go in there, there's a whole specific video I did last week for another group focused on Canadian oils, the marijuana names, so you could go in and look at that. So that kind of thing is going to be sitting there, and hopefully you can find something there that's of interest. Okay, let's get over. This is West Texas Crude, and what I want to talk about, this is huge, obviously, having crude break down really hard. And what happened yesterday was just the shortage of, or on Monday, Tuesday, was the shortage of storage for oil, and people getting pushed into taking delivery of the oil and no place to store it or no ship to put it on. So they got squeezed and they had to pay people to take it, and it ended up being quite a gong show. Normally it's not that disruptive, and so this is a pretty meaningful thing. It was the first time oil's ever traded negative. That is a real interesting dichotomy, because what happened in the stocks themselves wasn't anything like that, and that's what we're going to talk about today. So when I look around, I just want to go up here and look at the crack ETF. And the crack ETF, try and find that big plunge in oil on this chart. It's not there. Yes, they've pulled down from $19 to $18, a couple of percent. That's obviously pretty major. So down about 4% on the week so far. Looking at the frac ETF, again, these are unconventional oil producers. This is the day that oil went negative. This is the day that the front month contract fell 60%. It was down as low as $6. It was $9 or $10 only 15 minutes later. It was moving around like a windstorm. It was really, really difficult. But look what happened to the stocks. They did nothing. It wasn't like they had long tails and came off their tails. They just held in. It was like nothing was going on. So the physical market was different than this contract market. I would say the other thing that happened here is that these names have been beaten down. I mean, these already moved, this stock moved from 99 to 32. This is a 70% drop, or the CTF, 70% drop, and now is sitting at 50. They've done a 10 for 1, I think, on this ETF. Let me just pull that up, actually. And the way you can always do that, just to see if they had to do a split or anything, is you can put events on the chart, and when you do that, it'll show up either dividends or splits. Yeah, so we had a 1 for 10 split last week, and what that means is for every 10 stocks, we made 1. So if it was trading at $5, it would now trade at 50. Okay, so anyway, this split has occurred, and what we see on the chart here is just holding in sideways. Look at how tight the range was. It was almost like nothing was going on, and behind the scenes it was an absolute gong show. So let's try and focus on the stock market, the stock chart reaction, as opposed to focusing on the oil. And if you're an oil trader, congratulations if you managed to trade through the speed of that successfully. It was a wild and woolly ride, I'm sure. On this frac ETF on a weekly basis, I think one of the things that I'm interested in, again, is if these oil names are going to start settling in here. I get news reports or emails from different oil bulletins and that kind of stuff every day. And the number of companies shutting in production and shutting down wells and slowing down the refineries, and like it's going on at an unbelievable rate. And again, low prices will force major action. So when oil was dripping around $30 and they weren't willing to cut, all of a sudden oil at 5, 6, $10, everybody's just shut in. And so that immediately stops the new oil hitting the pipe. The drilling isn't happening, so that stops any new upside in a well, because what happens when you originally drilled a well, you get a lot of oil quickly, and then it has a decline rate where, let's say it was doing 1,000 barrels, it would do 1,000, 800, 600, 400, and then that 400 would slowly diminish down to say 100 or 30 barrels a day or whatever. So you have this long tail on the well. When you don't have any upfront drilling, obviously those big 1,000-barrel pushes aren't coming through. And so the decline rate over a couple of months very quickly happens with no drilling activity. That no drilling activity isn't just in North America, it's worldwide. Every place that oil is being produced, so Brazil, Venezuela, Russia, Kazakhstan, Holland, Canada, US, Mexico, all around the world, every place is quickly shutting in production. OPEC, all of the players there, Russia, and Russia's not in OPEC, but OPEC plus we call it, Russia and a lot of the OPEC nations we're talking about, rather than waiting till May 1st to start their production cuts that they just agreed to do them immediately. And I think what you find out is they've been doing them because at the price of oil falling at the rate it is, they're all shutting in wells because they're unprofitable. So this low price of oil really helps to stop production and get the price under control very, very quickly. Now, we still have issues around refining. How fast is the market for transportation fuels going to pick back up? We still have truck fleets moving groceries and goods, but for the most part, the automobile or the individual use has dropped, and our gasoline has never been cheaper, but there's no reason to go fill your tanks if you're not going anywhere. And that's the same problem for everybody else, and that's why a farmer might stockpile fuel, but just about everybody else is waiting for when it comes available at the pump. So very few situations where people can, I'll call it, hoard the fuel for a future date. And some power generation facilities or people that have cogen facilities on their sites and that kind of thing. Cogen is when you generate, say, electricity off the heat from burning gasoline or diesel or something. All of those facilities where you could either burn diesel or gasoline or electric or nat gas, you could have a choice of fuels and pick the cheapest one at any given time. Obviously, they'll be stockpiling, but it's very little of that. So what we want to focus on now is these oil stocks that held up very well through all of this trauma. And with the contract expiration of the May contract, now we're focused on June. And again, if America is going to start rolling, or North America is going to start opening parts of the country up as it seems safe to do so, and I don't even want to get into trying to figure that out. We'll just talk about oil. And in the oil situation, what we're seeing is some pretty good price action on stocks. And so what I've set up here is I've gone through a chart list of a whole bunch of oil names, and I've sorted them by scooter ranking, and so actually by scooter universe, so that all the large caps are first. So I'm going to hit view all here. We're going to go down to the 7th page, and then I think, see how there's no scooter ranking on some of these, like they used to have one, or they might not have. So here's one, Baytex Energy used to have a scooter ranking, hasn't had one because the price has been too low. And if we go down here to Mexico, these are still not in there, and I think it's just a little farther down, so bear with me. I just want to start at the top of the large caps. I'm so sorry, it was page 8. Okay, let's get in here. There it is. Okay, so here's Cabot Oil and Gas. So what I've done is I've sorted based on StockCharts technical ranking, making sure it was a large cap group, and then putting the best movers this week first. So not necessarily the highest scooter ranking, but the best price movement action this week. And so here's Capital Oil and Gas, and you can see that it broke out to new highs. So in the back of all of this, it actually made new 8-month highs or something and closed right on last week's close on Friday. Friday, a lot of the oil names pushed up, and then the last 2 days have just kind of wobbled around. And now we're going to see if, as we move into the next month, if we can get any sort of thrust higher here. So a very important place on the charts. Again, who would think that an oil and gas stock was the best mover in, or one of the better movers in all of the stock market recently? So they sold off hard, and I get it. They were ugly down here at $12 and $13. This thing's already back up to 22. The scooter ranking on this is 97. So better than 97% of the large cap stocks is the price action on Capital Oil and Gas lately. Crazy good. So as we walk through these charts, that's what we want to look for. So here's Apache, and it's up 1.24% this week. That's not great, but considering what we've lived through, that's pretty awesome. And then the scooter ranking had actually kicked up just before all of this happened, and now started to wind back down again. This could be one of those stocks that actually fires right back up and gets going. It pays an 11% yield. I'd be cautious because a lot of them are changing their yield, but it looks like it was paying it just this week. So actually, yeah, they did change it. It was 25 cents every 3 months, and now it's 0.025. So they dropped it almost to zero. So watch your yield numbers closely because a lot of them, when they came under pressure, have dropped the yield. Here's Holly Frontier Corp, and again, price action this week down 1.63%, but scooter ranking starting to improve, getting back up near the 30. I like it when it goes from really oversold and starts accelerating, turning back up. Really some nice opportunities there. Here's Marathon Oil, and what we see on Marathon is a big gap down. This is roughly March the 9th when the OPEC meeting didn't work, and all of a sudden they gapped onto the much lower level. So this is still consolidating down here, holding in around 2% down on the week. Again, not great, but not bad. Devon Energy down here at 1.84%, and you can just see, a lot of these are gapping down and they're in the high end of the range. Now the question is, can they turn up? But I think what you want to focus in on is how they haven't really sold off for the last 2 or 3 weeks, even though the price of oil is swinging wildly. And I think that speaks to the amount of oil that's being shut in. And also from a refining perspective, we've probably lost all of the volume we're going to lose. It's whatever we're at is probably the base level worldwide. And if we're going to start improving, now we'd improve from here. So this stock was $26, now around $8. That's an unbelievable haircut. So it'd be, a gain of 300% to get back to where you were in January. Now, does that take a year? Sure. But, I do think the economies are going to start to open either due to political pressure or some sort of viral improvement in terms of treatment or vaccine, whatever. But there's a lot of pressure to get the economy going because a lot of people are struggling. So with all of that pressure, we've got these stocks behaving slightly differently here. And again, as we look at these names, this was a 5% move down this week. The volatility's been huge, but the important thing to keep your eye on is really over the last 2 or 3 weeks, this is still in very good shape. So far this week, it's made higher highs and higher lows. Who would have thought? Okay, ConocoPhillips, really great company. Sitting up here, $35 last week, trading down 5%, trading down at $33 this week. Still within last week's range, so far an inside bar. And for me, when they trade so well with all of this pressure, that's what I want. Now, if I'm starting to see, really long tails like this as they fall below last week's, those are definitely the stocks I want to avoid, because if they're not holding in with the rest of the big peers, They either have financial trouble or production trouble or whatever. They're going to be sitting in a spot that you don't want to know. So this is probably a good week to use as a heartbeat. How well did they hold up through the major price swings, and how committed were the investors to holding the names through it? I think, ConocoPhillips, this is a wonderful position. Here's Valero, same idea. You just see that, they tried to take out the prior high, definitely a higher low so far. It's at the low end of the range for a week, but, we did lose 60% on the front month. So yes, you're going to have big pullbacks. Now here's Concho Resources. Concho gapped down late July when they said they were no longer going to keep up their drilling program to try and grow production in the shale. So they were having trouble keeping up anyway. They couldn't get the financials to do that. So one of the things they did was they when they announced that, the stock immediately dropped, and it was I'll call it 100 to 70 just to pick some numbers. Wandered sideways, briefly started to rally into the end of the year, and now has sold off. This isn't my favorite pick, but it was one of the better performers, and it's trading just inside last week's range. So still very, very good. And again, I don't want to see them start making new lower lows here. They could go slightly lower, but I definitely don't want to see these waterfall sort of conditions start to peak into these stocks. If they do, that's going to be a much bigger problem. But some of these strong names have held up very, very well. Here's EOG, holding up quite nicely, right in the same range. ExxonMobil, just a big bellwether, and it's already had its sell-off, right? 70 to 30. Whoever thought ExxonMobil would go down, 65% or whatever in a few weeks. And now it's sitting back up around 40. This isn't my favorite name. It doesn't have the sort of up heartbeat to take it higher quickly. Okay, Chevron Corp, same idea, trading inside the prior range, no big deal. Pioneer Natural Resources, so this is starting to make a lower low and a lower high, but so far it's back inside last week's range. I think that's where we want to see them close by Friday. Hess Corp, trading inside last week's range, still good. Phillips 66, same thing. Noble Energy, same thing. And I'm going to get down into some of the mid caps here. We're still in the large caps right at the low end of the range. And Marathon Petroleum holding up in there. Oxy Petroleum, this one's been really taken out. They have huge debt after doing the acquisition. I think it was Anadarko. So anyway, they're sitting here with a bit of a debt problem, with lots of debt, low revenue. Warren Buffett owns a share of this one, so maybe they've got a backstop that's going to pay out for them. But this is a pretty wild ride, down 10% already this week, actually holding in considering the volume of debt they have. Okay, so here we are on mid caps, and we've got Artero Resources, and look at this big downtrend going on here and starting to turn up. This is quite nice, albeit from a terribly low number, 62 cents up to $1, up to $2. This one's really on fire. So perhaps natural gas, because natural gas has that same sort of profile. I do like the fact that this whole chart is starting to change shape. What I would look for on here is I want to see this momentum trend break. And when that starts to break, that's probably, you'll find the stock starts to accelerate there. It's already accelerated up 300% off its low. But perhaps we get an opportunity to see a little faster pace there. Looking in on EQT Corporation, this one's starting to move. It was $10 2 weeks ago, $15.50, up 16% on the week. Big move. So I'm pretty sure that's probably a bit of natural gas. This Peyto Corporation is in Canada, really beaten up, but still trying to climb and having a very good week, up 24%. Range Resources, look at the scooter ranking up here, tagging 99.2%, up over $5, very close. It only has to get to 570 to be, with 570 would be 9-month highs. That would be crazy in an oil company. So keep an eye on these. They're starting to move. This is a good example of how let's just annotate this chart. What we see here is this trend down, and there was a trend here that tried to make the lows come out, rallied briefly in here and couldn't get going, and then obviously the big sell-off. But I like the fact that this base has been completed. We're making higher lows here. Let me get rid of this line. We've made a higher low from here to here in momentum and a lower low in price. So the selling wasn't as extreme here and seems to be ready to turn higher. So I like that kind of price action coming off of these big pullbacks. Cosmos Energy just ticking sideways, but up 8%, still making higher highs and higher lows on the week. Western Gas Partners trying to push up as well. LNG, Cheniere Energy, making a nice push. And speaking of that, we're starting to see the shipping companies turn up. I did a show on it roughly 2 weeks ago, a Market Buzz going through the shipping names, and I'll try and do that next week. But there's some nice opportunities in there. So if in the meantime you get a chance to go look through those shipping names, feel free to go check them out. A lot of people are storing oil and gas and LNG on the ships and paying for the storage in hopes of a higher future price. So you might see some of those shipping stocks price out kind of pretty well. Here's Murphy Oil, and holding in here down 1%. Again, moving down very fast. Here's the scooter ranking down to 9.7 already. So there's a few names at the top and falling apart quite quickly. Here's Parsley Energy, and they have quite a bit of a hedge, is my understanding, which means they've sold their oil into the future at $80, or sorry, not at $80. I think it was $50 or $60, but they'd sold out quite a significant portion of it. With that means that they're not so tied to that spot price that we saw wildly swinging this week. So when we get those types of moves, that's that's the kind of information that we're hoping to see, and when we get that that support that comes through from having a longer time frame, that's really going to help us stay invested. So one of the things we need to focus on is, do they have hedges? And I don't cover that off technically. Usually you can find that either through their annual reports or through other fund reports or something like that. Or I saw it on a sheet of paper where they'd graphed out all of the hedge levels for each company, what percentage they had hedged and at what price. So Parsley had a higher percentage of its production hedged. It's trying to hold in here. We'll see if it can start to take off to the upside. And, starting to get back through that March the 9th gap would be a pretty important idea. Cenovus Energy, another Canadian name here, dribbling down. Again, just holding nicely in here as oils come under so much pressure. And if this could start to rally out of here, I think that's just the kind of thing we're looking for. PBF Energy, again, just building a base in here, looks quite nice. WPX Energy, this one's trying to push up a little bit higher. Broke out 2 weeks ago, and again, just gently making a bull flag here, and perhaps we'll start to see that move up towards $6. Imperial Oil, another Canadian name, migrating sideways in here. It's not my first pick, but it could still do okay. Continental Resources, big swing 2 weeks ago and then pulling back and trying to find support around this $10. CNQ, Canadian name I really like. I do own some of this one, but just to try and not show my bias or whatever, I'm just saying I have started to invest in some of these names. And I'm looking for it to hold in around here, and it might wobble a little bit. I just think that we're setting up for a relatively big buying opportunity on a long time frame basis, and that's kind of the area of expertise I'd like to get into, where you might have to put up with a few weeks of shakiness, but in general, we should be close to building the lows. EQNR, trying to hold in here, obviously. $12, same sort of idea. But as I go through these charts, hopefully you're getting an idea of just putting them in an order that you can look at. And I think the benefit of finding some of these stocks early on here is the opportunity for them to double. And as I mentioned on that recording that's on my website, if you look at Amazon, it's got to go from 2,000 to 4,000. These stocks literally only have to get back to where they were, some of them a month ago. It's crazy how far they've fallen. So here's Crescent Point Energy. This one was, this was a $17 stock 4 years ago, and it's under $1 here. So can it bounce? Yes, and they do a lot of work in the Bakken up in Montana. So if it starts to take off to the upside, it only has to go from here to where it was on March the 10th or March the 1st for a double. So that's the kind of opportunity that's setting up in these names if they can finally start to push higher. Total Elfina, same thing, French company, $32. This one's near the bottom of last week's range. I want to see it hold here. I don't want to see it start slipping a little bit more. Okay, let me just head over to my website. Right now it's on gregschnell.ca, and I'm trying to merge the two sites together, but there's an article here under this article, and it was an oil and gas presentation, and just click on this link and it'll take you to it. But what I was presenting on was kind of a group of companies in Canada that are well positioned for the turn here, and if they can start to break out of this base, what you're looking for is find some metric either on a 60-minute chart or a daily chart or something that you want to start to see, whatever, moving above the 20-day moving average or making a higher low in price, whatever. Find some indication of what you're looking for, and if you can start to see these names come out of here, especially after the volatility we've seen Monday and Tuesday, that should give you a really nice opportunity to set up into the months ahead. Now, I don't know if it'll last all the way into next year. Obviously, if we get a slowly growing economy and we have some improvement on the back of biotechnology and that kind of stuff, that will all work together, and by the time, I'll call it's safe and we see everything growing, these stocks will be up 100 and 200%. So yes, you do have to buy near the lows if you want to get the big moves, but you're also going to have to put up with a lot of whipsaws back and forth. Okay, I think I've covered that off. I'm going to quickly shoot up to the top here and just cover off the overall indexes. One of the things that we're seeing now is here is the price action on the Nasdaq Composite working its way higher and having the pullback this week so far. What we saw was that the advanced decline line wasn't participating in the upside move anymore, and we saw that late last week, and it started to roll over, and now it's making lower lows instead of higher highs. That's a concern, and that would probably set up for a bigger thing. The second component of this, and I have mentioned this chart a few times, is this is options expiration, and the market turned over right at the options expiration in February, worked its way lower. On the Monday after the options expiration was the absolute low, and now what we find is the options expiration Friday was so far the high in the last 2 days. I just think it's pretty important to be aware of how technically this setup was, and we also had a reason to look for support and resistance for the S&P 500 around here at the end of the February low, bouncing out of there and then falling through on this March 9th gap down, which was due to oil. Here we are sitting here again and falling back. Part of it's due to oil, but the other thing, I think it's been a pretty good run. So with that, thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesdays at 10:30 a.m. Eastern. You can also see the recordings on StockCharts TV YouTube page. Thanks for taking the time to join me. Lots of action out there, lots of after hours market information. Try and stay on top of it and have a good week trading. Thanks, everybody. Bye-bye.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.